if I had something like that to play with. Our next speaker is Bryan Koon, who has served as the director of the Florida Division of Emergency Management since February of 2011. Prior to joining the division, he worked with Walmart Inc. for 5 years as their operations manager and director of emergency management. Bryan's experience with emergency management includes the private sector, the federal government, and state government. He's worked at the White House military office for 7 years, where he was the watch officer in the President's Emergency Operations Center. Bryan is currently serving as the president of the National Emergency Management Association, vice chairman of the Multi-Hazard Mitigation Council, and is on the board of directors of the National Information Sharing Consortium. Bryan has a BS in Natural Resources from Cornell University. That's a Bachelor of Science, with an MBA and a graduate certificate in Emergency and Crisis Management from the George Washington University. Bryan currently lives in Tallahassee with his wife Jennifer and their 3 sons. Bryan.
Thanks, John. Good afternoon, everybody. Good to see you all. My topic today, I'm talking about flood insurance, not necessarily because I thought you would enjoy it, but because my family and friends will no longer listen to me talk about it, and I have a compulsive need to do so. Now, seriously, flood insurance, I think there's a real impact to everything that we do with regards to hurricanes, and I think there's some real opportunity there as well. So I wanted to spend a few minutes today giving you some background info on it, and at the end of it, I'm going to give you kind of a call to action on some things that I think would be useful if you want to engage in them going forward. The flood insurance actually came to be. I'm pushing the forward button on this. There we go. Flood insurance. The flood insurance program actually started in 1968. And it came about on no small part because of the influence of Hurricane Betsy, which impacted the Gulf Coast, hit Florida, Louisiana, moved inland in 1965. In 1965, the private flood insurance market had largely abandoned flood insurance policies. And as a result of Hurricane Betsy, there was a huge federal payout to all of those folks who've been flooded by Hurricane Betsy. And so Congress acted and created the National Flood Insurance Act of 1968, created the National Flood Insurance Program, so a federally backed, federally run insurance program to allow people to buy and maintain affordable flood insurance coverage on their homes and businesses. And so the program's been in place now for about almost 5 decades. It's grown tremendously over time. This is a chart showing you growth over time. It starts in 1978 and moves to current. That's the top is the number of policies. Right now, we're somewhere in the 5 million or so range of policies across the country. The bottom one shows the amount of coverage going from virtually zero in 1978 to somewhere north of $1.2 trillion of coverage in the United States as of right now. That $1.2 trillion, to put it in context, there's about $27 trillion worth of housing stock in the United States. That $1.2 trillion also covers businesses. So probably about 3% or so of the value of the homes in the United States have flood insurance on them. So just for future relevance there, 3% or so of the housing stock in the U.S. has some kind of flood insurance coverage on it. The program grew, one more thing on this, the program has grown over time, a couple of reasons why. In 1973, Congress mandated that anybody who has a federally backed mortgage and they're in a special flood hazard area, procure flood insurance prior to buying their home. So that's where you can see kind of a spike. If you went earlier on this graph, you would see an increase in the number of folks who have flood insurance on their home because they are required to, when they go into closing, if they're in a special flood hazard area, to have flood insurance. However, there is no mandate that they maintain that flood insurance. And so one of the things we'll see as we go on later on is folks who are required to show proof of flood insurance when they buy their home. Nobody goes back 3, 4, 5, 7 years later and says, do you still have the flood insurance? Once you close on it, nobody goes back and checks to make sure that you're maintaining that flood insurance. And that's been problematic over time. The flood insurance program, when it started, there obviously were no flood insurance rate maps. And so as they started issuing policies, they were really not guessing, but the policies, the cost of the policies did not necessarily align with the risk that home or business had to actually flooding. And so in many cases, what you had were policies that were priced at less than actuarially sound rates, meaning that they were undercharging for the risk that home faced. And so the rates were, they were affordable, but they would often not cover, the program could not cover the cost of what they would be paying out in claims in a year because they weren't collecting enough premiums. And we'll see that has caused problems over time as well. In an average year, the program generally breaks even. They're taking enough money in premiums to help pay out the claims they have. The problem occurs in those big years. And the spikes you'll see there are Katrina and Sandy specifically, and you see some other ones for '05 and things like that. In those years, they have to pay out way more than they actually collect in premiums. And they don't have a cash reserve because on the other years they break even. The program doesn't have any kind of reinsurance, and so basically in those years where it has to pay out more in claims than it collects in premiums, they borrow money from the federal treasury. Right now, they are in arrears to the federal treasury at a tune of around $23 billion. And it's not going to get back to zero anytime soon. At the current rate, in 15 or so years, they might get it down to about $17 billion. But basically, there is no clear path at this point for the National Flood Insurance Program to pay off its debt to the federal treasury. That led to a couple of things. It led to, in 2012, the Biggert Waters Reform Act. And many of you are aware of this. This was Congress's effort to try to get the program fiscally stable. Now, every 5 years, Congress has to reaffirm the National Flood Insurance Program. They have to reauthorize the National Flood Insurance Program. 2012 was one of those years. In 2012, Congress mandated that all of the flood insurance properties across the country be brought up to actuarially sound rates. At that point, about 20% of the properties were still paying less than actuarially sound rates, meaning by then, we'd already mapped everything. We knew what the risk was for those properties. We knew what an insurance company should charge that property based on the risk they face. 20% of the policies were still paying below those rates because they'd been grandfathered in over time. And so what Biggert Waters said was, we're going to escalate the rates over time, 25% a year, to bring them up to actuarially sound rates. And if you sell the property, whoever buys that property is automatically going to pay what the actuarially sound rate should be. And so they would automatically, when you saw that property, see the new rate go into effect. That had some real chilling effects on real estate markets, in particular real estate markets in parts of Florida, in the Tampa Bay area, and in parts of Louisiana as well. What you had was basically the resale market for homes went to zero there for a little bit because folks were finding out when they would go to closing that while the previous owner may have paid $2,000 a year for the flood insurance premium on that home, the new owner was going to have to pay 3, 4, 5 or more times that amount. So they may be having to pay $10,000 a year premium on their flood insurance policy. And at that point, they walked away from the transaction. And so in areas that had a high density, had a high propensity for flooding, the real estate market just collapsed in those areas. And so in an effort to fix that, Congress went back, reformed that act 2 years later. They changed the increase in prices. So instead of going up 25% a year, they go up on about 18% a year. They've softened some of those automatic price increases when you sell the home. They did institute a couple of other fees on top of that. So basically, they softened a little bit to try to reduce the impact on homeowners, especially those in those areas, trying not to kill the housing market. So and it also refunded some of those folks who saw those dramatic increases. They're still increasing over time, still working towards actuarially sound rates, but again, tried to do it in a way that didn't kill the housing market. So that's kind of been the history of the flood insurance program to this point. Now, the acts in 2012 and 2014 have had some fairly significant impacts on the amount of people in the United States who have and maintain their flood insurance. As I said earlier, we're not insuring enough as it is. We weren't insuring enough of our homes against floods to begin with. 3 to 4% of the total housing stock value does not reflect the actual risk that Americans face with regards to flooding, our most prevalent hazard. And it's gone downhill in the last few years. These next three graphs will show you the percent change in the number of policies across the country. This first one is ending in 2012. The states in white are basically they are the negative. They've lost claims. The ones in blue, some shade of blue, either were flat or a small percent increase. So this one ends September 30th, 2012. By that point, there had not been a significant increase in anybody's premiums prices. What you see is the normal fluctuation you would see year to year in people maintaining flood insurance. What's of note, particularly with flood insurance, and you'll see this a couple times on these charts, every time after a disaster and a flooding disaster, everybody goes out and buys flood insurance. So this one came after the Vermont floods, and you can see Vermont is dark blue. People went out after they'd already flooded and got flood insurance. This is 2013. Starting to see some more changes in this point. One of the things you can't see from where you are, New York, you can tell obviously started buying some more because they had some floods. But the number you can't read in that lower left-hand corner, Puerto Rico, in that graph right there, a 20% decline in the number of flood insurance policies that the folks in Puerto Rico maintained. So Puerto Rico, obviously, flood-prone, hurricane-prone. Not a good idea for 20% of the population to just drop their flood insurance premiums, their flood insurance policies, because their homeowners policies don't cover floods. So now 20% of the folks who had flood insurance, next time they flood, are not going to get the insurance from that proceeds. Other note on that one, Texas went down about 2% that year. Louisiana and Florida roughly flat. Louisiana, Florida, Texas, by the way, make up some of the largest stakeholders in the flood insurance program. That you start to see some even more drastic impact here in 2014. All of these states in white declining percentages in policies for the flood insurance program. The one exception you'll see is Colorado because of the Colorado floods. So after they flooded, they went out and bought more. Everybody else started dropping their policies. Puerto Rico, in that year, that 1 year, 12 months, dropped another 63% of the policies in that area. So Puerto Rico now has dropped to that point about 75%, when you combine those, about 75% of the policies in 2 years has shedded their flood insurance. Florida that year went down 3.5%, Louisiana down 2%, Mississippi down 4.4%, South Carolina 8%. So again, that ends in 2014. The year before South Carolina had its gigantic floods, about 8% of the population dropped their flood insurance policies right before the biggest floods they've ever experienced. So those are the percent changes you'll see over time. The next two graphs show you some of the policies in force, and these numbers are even more striking. In 2013, in this one, Puerto Rico had 45,890 policies. 2 years later, in this one, 10,000 policies. So 2 years, Puerto Rico went from 45,000 flood insurance policies to 10,000 policies. In this 2013, Florida had a little over 2,052,000 policies. 2 years later, 1,845,000 policies. So 208,000 policies Florida has dropped, almost 10%, over 10% of its policies in a 2-year period. So Florida now has 10% less of the citizens of the state who have any kind of flood insurance policies at all. That's not good. Anybody who lives in Florida knows that we are susceptible to flooding almost anywhere in the state. If you don't live by the ocean or live by the river, you're going to live somewhere where we can have 10, 20 inches of rain, 30 inches of rain, and you're going to flood wherever you are. So the numbers are not good on this piece of it over time. And these are a result of a couple of things. One, like I said, the prices are increasing. Two, people have a very short-term memory when it comes to floods. If they haven't flooded in a few years, they no longer view their flood insurance policy as a good investment. I don't know why. They don't act the same way when it comes to life insurance or car insurance or any other kind of insurance, but it is with that and with flood insurance. And also, finally, there's nobody holding them to account on maintaining that flood insurance. There's no kind of enforcement of that. All right, so you may ask yourself, okay, so what? So, folks are dropping their flood insurance policies. What's the point? Well, by the way, Florida dropped 200,000 policies in a 2-year period, during which the state continues to see astronomical growth. We've gone up since 2005. Florida has about 3.5 million more people in the state since the last time we had a hurricane. You can see there, 2012, we had about a little under 19 million people. We've gone up 1.5 million. So at the same time the state grows, the number of insured folks declines. And so the number is actually even more drastic when you take into consideration that population growth. All right, so what's the impact of this? Well, here's how this impacts you. Here's how this impacts your communities. I'm going to read you some numbers here to kind of put this into context of how this impacts your communities. That Colorado flood from 2013, there were 1,700 claims paid out on those flood insurance claims. So 1,700 people in Colorado had flood insurance and got payout. They got an average of $39,000 paid back, and that so that they can go back and rebuild their homes and get their lives back to normal. All of these, the ones I'm going to list, are federally declared disasters for individual assistance. And so people were eligible for some FEMA grants through the Individual and Households Program, which will also help them get back up on their feet. That program is designed for folks who did not have adequate flood insurance. So in Colorado, 1,700 people had flood insurance. Another 17,000 registered for Individual and Household Program. They got $3,740. Okay, so in Colorado, 10 times as many people who were impacted by that flood did not have flood insurance, and they received 1/10 of the amount of dollars. All right, so again, 1,700 people got enough money to rebuild their homes. 17,000 people got $3,000. $3,000, as anybody who's been through these kind of situations knows, is not going to help you rebuild your home. It's not going to get you back up on your feet. We see that situation repeated. Let's talk about some hurricane states. Florida, this flood right here was in Pensacola in April of 2014. Florida does a little bit better on flood insurance coverage. In that one, about 2,100 people got insurance claims. They got on average of $51,000. But 7,000, a little over 7,000 people did not have flood insurance. Their average payout, $4,000. So those people who had flood insurance, and on this street, you would have people who had flood insurance right next to people who did not have flood insurance, a difference of 12 times. One house would get an average of $4,000. The next house, people who maintained their flood insurance would get $51,000. In South Carolina, the difference, there were 9 times as many people who did not have flood insurance as who had flood insurance, 3,000 versus 28,000. The average payout for flood insurance, 25,000. Average payout for individual assistance, 3,000. You're going to hear that number. The average payout for individual assistance is in the $3,000 to $4,000 range. It is not designed to make people whole. It was never designed to make people whole. Finally, in Texas in June of 2015, Texas actually did pretty well as far as people who had the appropriate level of flood insurance. There were 6,500 people who had flood insurance and got paid out, but nearly 13,000 people who did not have flood insurance. The difference here is even more drastic, though. The average claim paid in Texas, $64,400. The average IHP through the Individual Assistance Program, $3,400. So a difference of 19 times between what people who could live right next to each other received in terms of how they're going to recover from that storm. $3,400 versus $64,000. Okay, so how does this impact you? It impacts you tremendously. First of all, if you're an emergency manager or a local elected official or volunteer organization, we're going to see increasing number of folks who are not going to be able to make themselves whole in these kind of situations. They are not going to have an insurance check. They're going to receive, if you get a federal declaration, they're going to receive a few $1,000s from FEMA. And at that point, they're going to not be able to get themselves whole again. They're going to have a home that needs to be mucked out. They're going to have a home that needs to be rebuilt, and they're not going to have the cash to do it. You will have, perhaps, some state funds to apply to that, but I know of no state who has enough money and has a big enough fund to help make up that difference. You're going to have the assistance of voluntary organizations who can go out there and do some of that work, do some of that muck out, do some of that rebuilding, do some financial donations, but I know of no volunteer organization or even group of volunteer organizations who can help make them whole. And so what you're going to do is slow down the economic recovery of that community, and you're going to slow down the chance that they're ever going to get back up on their feet because it's simply going to be too difficult for them to get there. That's going to happen more and more and more unless we set this path going the other direction. It's also going to have an impact on the local economy because for a couple of reasons. One, the state pays for IA on the other needs assistance, pays 25%. So in all of these disasters, there was a payout from the state of several $1 million on the IA program. There's an impact to the property tax collection. Let's, just for fun, I ran some of the numbers in Texas. Assuming that insurance claim payout, $64,000, was kind of the average damage that all those homes had. You take that 13,000 people who had that amount of damage, you multiply it by the amount of damage, you get to about $29 million, I'm sorry, you get to about $1.5 billion of lost property value in that state. So roughly you could say that people in Texas in those floods in 2015 had about $1.5 billion worth of damage done to their homes that they are now not going to collect back on that. Texas has an average, and I'm sorry I'm geeking out on you here, but an average property tax rate of 1.94%. So that is $29 million a year that the local jurisdictions in Texas may not now collect in local property taxes. So that's $29 million of those communities who've already been impacted by a storm are going to be struggle to recover, now are not going to be able to collect in taxes to help build schools, repair the infrastructure, and move ahead. So now you've got citizens who are struggling to recover, who are struggling to get back on their feet, living in communities they're going to be struggling economically and getting back up on their feet because their tax base has been destroyed. And so the situation continues to get worse and worse on this piece of it. However, there are some bright lights here moving forward. And here's what I want you all, here's the call to action, here's the so what, and here's what I think that you all have the ability to help influence going forward on this piece of it. I'm going to ask you to do 5 things on this for me. Next year, 2017, will be the year that the flood insurance program is reauthorized by Congress. And so what you're going to see probably starting this year, maybe not as much this year until the election is done, but as you're going to see a lot of activity on it next year, is conversations regarding the National Flood Insurance Program. And you're going to see a wide variety of opinions. You're going to hear folks, and a lot of it will be based on where they live and the risk they feel their constituents face. You're going to hear a lot of the inland folks talking about the fact that they're subsidizing people on the coast, et cetera, et cetera. It'll be a very interesting conversation. But I urge you all to become better informed about this so that you can help educate your local elected officials, your elected representatives about the issue and your perspective on it. One of the things that came out of the Biggert Waters Act in 2012 was a tasking to FEMA to contract with the National Academies of Science to do an affordability study on the flood insurance program. Those 2 studies are now done. There's the covers of them right there. It's fantastic background information. And by the way, people at cocktail parties love to talk about this kind of stuff, so read about it and entertain your friends with it. But take a look through these things. It's a great background on the program. It describes very well how we got to the situation we are, and then it outlines a whole variety of ways that the program can be improved and lays out some very interesting concepts in there. You know, some of them are voucher programs for people. Some are the ways to integrate more private sector insurance, and there's some very interesting ideas in there. Take a look through it, those 2 things, and start considering what may work where you live. And then talk to your local elected officials about it, because a lot of them will be focused very much on just the cost of it. But it's got to go well beyond the affordability on it, because if you don't address some of these other issues, it won't get fixed. So 1, educate yourself and try to get more people talking about this. 2, we are not taking as a nation right now full advantage of the discounts that we can achieve in the current pricing system. One of the mechanisms within the flood insurance program is called the community rating system. It was designed for those communities who are enrolled in the National Flood Insurance Program, reduce the premiums that their residents pay by basically increasing the resilience of their communities. And so if they had green space in which could help be used as drainage, if they helped educate folks about flood awareness, if they had a notification system to tell people out, all of those things could be taken credit for and reduce the premiums that people are paying on flood insurance. You can reduce the premiums by up to 45% by taking some of the actions in the community rating system. So basically, if you've got a community and your residents are paying on average of, say, $2,000 a year in flood insurance premiums, the actions that a community takes to help prevent future floods and reduce the impact of future floods, they could make that $2,000 premium now an $1,100 premium. And that's money back into the pockets of the citizens of that community. That's money back into the economy there. That's going to reduce future response costs. That's going to improve the ability to recover from future disasters. It's going to make that community a better place to live because they're going to be less susceptible to future disasters. The problem is not enough communities take advantage of this system. The fact is there are about 21, let me get the exact number here. There are 21,705 communities in the National Flood Insurance Program. So those are the ones, you know, if National Flood Insurance Program goes down to the lowest, whether you're a town or if you're an unincorporated county. So 21,705 communities in the National Flood Insurance Program. 1,211 of them are in the community rating system. So less than 6% of the communities in the United States take advantage of this at all. And some of these things are extremely easy to do. You know, you can get in the program basically by just cataloging the stuff you do and automatically get a 5 or 10% discount. But 94% of the communities in the United States right now are not doing anything. They're not getting any discounts for their citizens at all. That map there shows you the ones that are. Each dot represents a community that's in the community rating system. Florida is better than average. We're still not great. Like I said, average across the country, less than 6%. Florida, we're around 47% of the communities participate in the community rating system. So we're doing pretty well on that. This map shows you the counties in green, and the circles in yellow are the cities and counties that are in the community rating system. Ones that are gray or red are the ones that are not. We are working in the state of Florida right now to get this to 100%. My goal is to have every community, every county in the state in the community rating system at least the 5% level, and to continue to move them up to achieve the maximum amount of discounts possible. Because frankly, I want anybody in the state of Florida who should have flood insurance to be able to be aware of it and afford the flood insurance. And anything I can do at the state level to help do that, we're working on. Right now, we've got 4 folks that work for the Florida Division of Emergency Management who go out into the communities and help them understand, first of all, what the community rating system is, how to get into the program, how to maximize their points. This manual, the one I showed you the cover of, this manual is, I think it's 700 pages long. It's got 14,000 possible points in there. Every 500 points is a 5% discount. To get the maximum amount, you have to have 4,500 points, but there's 14,000 points that are in there. And so a whole lot of different ways you can achieve these discounts. And a lot of the things that you can do to achieve the discounts are stuff that you all do. They are outreach and education. They are alert notification systems. They are, again, preserving green space. They are infrastructure improvements. Lots and lots of different ways you can achieve those discounts. Most of you, though, are probably not the person who runs the flood insurance program in your community or who runs the community rating system. But look at this manual, flip through it, find out what you are doing that they may not know about, and go talk to that person. Talk to them about the community rating system. Help them make sure they're taking advantage of the stuff that you are doing there and get them into the program. So that's one of the next thing I want you to do. Read the CRS manual, or at least peruse the CRS manual. Find out what you're doing and go talk to the right people and get them engaged. A problem I have is helping elected officials understand the benefit to this. However, as soon as I tell them how much money it's going to save their constituents, and sometimes when I say that, I say how much money it's going to save their voters, they start to pay attention. And we're doing a lot more outreach on this directly to the consumers as well. Say, hey, listen, you know that big flood insurance bill that you hate paying every year? It could be less if your local government did these things here. And so that's kind of the stuff we're doing right now, a lot of outreach and education for folks, helping them understand more about the community rating system. 4th thing, so far, learn more about the flood insurance program. 2, get engaged in the reauthorization conversation. Consider the community rating system. 4, there is an effort afoot in some parts of the country, and it's happened in Florida as well, to improve the regulatory environment for private flood insurance. It's very nascent at this point. Florida did some stuff in the legislature in 2014 to improve the ability for private insurance companies to offer flood insurance. At this point, there's about 2,500 or so private insurance policies in the state. Now, I'm talking your entire coverage. There's always been kind of that excess coverage market for those fancy houses, because the National Flood Insurance Program only goes up to $250,000 on the cost of the building. So if you have a $1 million house on the beach, you buy the extra coverage from a private. I'm talking everything, the zero and up private. So in Florida, about 2,500 or so policies like that. That's happening in some other states, and it continues to improve, because right now, there's a lot of cash out there in the insurance market, and they're looking for ways to invest it. They want to get into the flood insurance market. And as those rates come up to actuarially sound, they're going to be able to compete and offer better prices, offer better services than the National Flood Insurance Program. So you're going to see more and more participation in the private sector insurance market in the flood insurance arena. And I think that's a good thing, because the private market, the private insurers guys understand risk, they understand pricing, and most of all, they understand marketing. They're going to be able to go out there and do a heck of a lot better job than we do as government, explaining to you what your risk is and helping you to price it in a way that makes it affordable to you and meets your needs. Right now, the flood insurance program doesn't offer a variety of deductibles and price points and coverage. It's kind of a yes or no type thing. The private market can do that. The private market can bundle it with some of the other stuff. And so you may be able to go to your insurer, the same one you buy car insurance from and home insurance from and boat insurance from, you may be able to add flood insurance in there as well. And through that, they might be able to achieve some discounts. So as the private market gets more and more into this, I think we'll see more flexibility, we'll see better outreach, we'll see better education, and we'll see better participation in folks who have flood insurance. And then the last thing I want you to do is talk about it. I talk about it all the time. I talk about it ad nauseum. This is a video, I think, if you can go ahead and play on it. We run PSAs in the state about, I'll let you watch this.
Doesn't cover damage to your home and property that is caused by flooding. So what do you do to protect your property when floods impact your community?
Flood insurance is the only way that you can protect your home and its contents against damages caused by a flood.
Floods can happen anywhere in Florida. And just because your home hasn't flooded in the past doesn't mean it can't happen in the future. Go to floridadisaster.org to find out how you can better protect your property with flood insurance.
Every chance you can, I encourage you to talk about flood insurance. And whatever your job is, whoever your constituents are, talk about flood insurance, because they probably, a lot of them are not aware that it's not covered by their homeowner's policy. That's something you need to help them understand. They're not sure how it works. They're not sure. They don't know about the 30-day policy before it goes into effect. When you buy a flood insurance policy, it takes 30 days before that goes into effect, and that's to prevent people from seeing a big storm coming and buying flood insurance. You have to do it 30 days in advance. So as you're talking about your hurricane season preparedness, as you're talking about the impacts of El Nino, as you're just talking to communities, every chance you can, I encourage you to talk about flood insurance and help people understand what their risk is and what they can do to help mitigate that risk. Because again, the more folks we have who are insured and who get the appropriate amount of compensation after disaster, the better we're going to be able to focus all the other scarce resources we have in that situation. We're going to be able to get the community back up on its feet more quickly. We're going to be able to use the voluntary organizations and their resources in a way that's really geared towards those folks who need it the most, as opposed to helping those folks who could have taken action proactively through insurance but decided not to. So those are the 5 things I want you to do. Learn more about CRS, learn more about the flood insurance program, get engaged with a conversation next year, because it's going to be a big conversation. Talk about private flood insurance and the possibility of that, and finally, use whatever platform you have to help educate people and get them up to speed on that one. So thank you, everybody. I'm talking again this afternoon as well, so if you didn't like this speech, you might not want to come back this afternoon, because it's me again. But again, appreciate y'all being here. Thanks.